We can't make you a morning person, but we can make your mornings better. Switch on to 94.3 Royal FM. The 8 at 8. 8 big questions for a bigger conversation. Sponsored by MTN. MTN. Everywhere you go.
Good morning. Welcome to the 8 at 8. Ephraim Ramwenge is in the studios already. Good morning, Ephraim.
How are you, Jesse?
It's Tuesday, you know.
I know.
What does it feel like we last saw him like last year?
It feels like a lifetime ago.
It's been ages, yeah?
How are you?
I'm good. I'm blessed. I'm alive.
How come you're not feeling cold? It was a cold night.
Was it really?
Not for everyone.
Not for everyone. I agree with you, Jesse.
No, I think I woke up.
I am
I woke
ranting
up and,
alone in this.
I
Clearly in
know.
this
I woke
alone.
up and I worked out, so that maybe that's what. And I took a cold shower.
Ephraim. Oh
No,
my
I
gosh.
mean in the
Just
real
start working
sense.
out. I love this new you. Like when
I'm
did this
trying
work
to-
out?
I'm trying to. I used to look umva. I used to have like
Six pack.
yeah.
You know.
Then what
Then
happened?
what happened?
Yeah, life.
They life appeared.
Yeah.
It started lifing.
You know, like
So then that's why I'm like, no, I need to figure it out again.
I'm liking this new you. Reboot.
I should.
Yeah, bring it back, bruh. Bring it back. I want to see the six pack. You see, when you have six pack,
but just
we shall just see it
Just
through your
imagine
t-shirt.
it. Just imagine it.
Don't
You
worry,
won't see it.
we don't mind about the other thing. So when you see that six pack and you combine it to the hair and everything, Lord have mercy.
The cancer, security
My
threats.
imagination is killing me. Jokes, by the way, guys.
Listen,
yeah.
let's speak of our conversation. I know we're going to talk about cash flow management and all of it, but you have in the past, you know, been in the space of real estate. We would like to have an idea of is it how the business of the day is being run, or is it situations forcing businessmen into a certain corner? We saw the Kigali Business Center being sold off the other day. Very prime property. Apparently, according to rumor, that the owner, the landlord, was not seeing revenues coming in. They say there were no people renting in that property at that time, and so the economic sense, they needed to sell it off to somebody else. I am not so sure if it was duress from people who needed their money back for the Kigali Business Center to be sold off. Prime property that had just gone through renovation. Now we're seeing Kigali Heights. Today we wake up to the news that Kigali Heights has been sold off for some $32 million US. Now apparently the Kigali Business Center was sold off for about less than $10 million. Interesting. Same location, different prices. What is going on, Ephraim?
Okay.
That goes for about 42.8 billion Rwandan francs.
That's
a
quite
lot of
some money, yeah?
It's a lot of money.
It's good. Really, a lot of money for that building.
Ephraim was also a tenant in Kigali Heights at one point.
Yeah, for a minute. I paid a lot of rent, a lot of it. But I think interesting thing. Let me just talk of a saying I heard, and I think it's so true. They say that if you want to become a millionaire, you need to use real estate. But if you want to become a billionaire, you need to use equities. And so that I want to focus more on the aspect of a millionaire. And I think when you look at Rwanda's real estate sector, again, I'm not an expert. I was in real estate at one point, but I was doing serviced offices. So like he said, I at Kigali Heights, I rented a sizable amount of square meters and partitioned it, put in furniture and rented it out to people. But I think for me, when I look at the advancement of the sector, where you hear a local investor acquiring a property for $32 million, I don't know if he got it using credit or it's his own money, but it's commendable.
You as a group of companies.
I mean, they have the liquidity, they have the money. So the question then,
This is a local company buying from a local investor, right?
No,
it's not a local buying from an investor.
No, actually, local shareholding structure of the previous owners of Kigali Heights Development Company only had 5% local ownership.
5%
Because it's actually
local.
owned by the company called Fusion Capital Group, which is a Kenyan UK-based company.
But then also, I'm not going to get into the details, but there were structures around the shareholding that I think were a bit more complex than just saying that it was only 5% local. That's another story for another day. But I think it's commendable. Now, to talk about the comparison between KAB, might call it Kabach, KABC and Kigali Heights. KABC was funded by banks. I think majority of the renovations were funded by it was one bank, if I'm not wrong. And the shareholder was failing to make payments purely because of, I think, the pricing of the real estate at the time was too high. And Kigali City Tower had a similar issue as well. Then they realized that instead of trying to go premium, let us figure out a way to allow the masses to come in. And I don't know if you
bring the market to the building.
Yeah, and I don't know if you have gone to Kigali.
I've been there.
City Tower, and it's from a real estate perspective, the developer is not losing any money. And so that's just the reality.
We lost the food court. We lost so many things in there.
But were you going to the food court? That's the question.
I used to go to the food court.
How often and how frequent?
Because I used to have my lunch at the food court there.
By the time, because you were at KFM at the time. But the reality is that a lot of traffic had shifted away from town. That type of caliber of traffic. And it was affecting collections. And any smart business person is like, I need to pivot. You're not bound to a chain to say you need to focus on food courts because Jesse likes food courts. If Jesse is one of
my church was actually at KCT,
and then it shifted. Yeah.
Also, the cinema was at KCT.
But the church shifted before the cinema.
Do you know how many people are not married now because there are no cinemas?
No, but there is a cinema. Just Canal
Is it even there?
It's there, Canal Olympia.
I badly want to go to a cinema. I have
too
been
far.
wanting.
So the relationship can't connect. The
handle.
Bluetooth that side, the signal is
So,
not
but you
strong.
know that people now don't even notice there's a cinema because it left that building.
Let me tell you, it's just you, honestly, if you Googled cinema Rwanda, Canal Olympia will come up. I think it's just choice. You guys are old. You're at that point where you don't go to cinema.
I love cinemas. It's one thing I looked out by the way.
Then in that case, I can blame Jesse for not orienting you into Kigali properly. But this is my point. Kigali Heights, they were looking for a buyer from 2019. Purely because when you most developers make money at the beginning and at the end of a development. What that simply means is if you're going to construct something, that's where they make that. They make money from at the beginning of the investment and then at the end when they sell out, not when they're collecting rent. Collection of rent, the cash flows are necessary to service any facilities you've taken, but you're not going to hold on to a building for 20 years collecting rent. It doesn't make sense for a developer unless you are a real estate investor. And so in real estate investing, there are two classifications of in vehicles that are used. So there's a vehicle called a REIT, an REIT, Real Estate Investment Trust. These are vehicles set up for investing in real estate. So they have what they call a D rate and an I rate. So D stands for development, I stands for investment. So D rates normally like to build and sell off. That's why you find apartments are built and then they look for people to come and buy the individual units. The fundamental aspect of that business is to get capital, build, and then turn that capital and then go build again and build again and build again. They lose money when they stop building. I rates on the other side are looking for patient capital. Juliana, who's like, I'm okay with getting 14% return on my investment if I can just park my $10,000 or $50,000 here. And so she invests with Jesse and Ephraim, and we have maybe, let's say, $1 million invested towards a development that has already been developed. So in this case, Kigali Heights. So Kigali Heights was developed by a D rate, which was made up of Fusion and all these other investors. Then we come together for our I rate. We put in our $1 million or $32 million, and we are willing to wait 10 years to collect our 12% per annum. So at the end of the day, real estate is a very robust sector. It's very robust in terms of as an instrument for investment. And so there are different people with different objectives. The same way someone will build a house to sell it, another one will build a house to rent it. Another one will say, I just want to buy, renovate, and flip it. Another one is like, I want to buy, renovate, and rent it out. Someone is like, I just want to buy, renovate, and sleep in it. And then it appreciates in value. Then after 10 years, I sell it and I move to another place.
But listen, we do not have a sufficient number of premium tenants in Kigali that you would think would occupy premium space, would you?
Things have changed.
Things have changed.
Yeah, like
for instance, when you look at Kigali Heights, their location, premium location, yes, indeed, it was far from my mind that the owners of Kigali Heights would be selling. But to some corridors, they think there's a new mall which is coming just opposite
Which is being
the
built
parliament.
at a very fast rate.
You know, that maybe that, from an investor perspective, you'd think this mall could sway and cause the churning of clients from Kigali Heights maybe into the other one. And so you remain with property that is not occupied. And so better sell now before the other comes. And I don't lose money.
So I repeat, I'm not going to get into the details of the people who are behind Kigali Heights, because I believe that that's their private business, and I won't get into discussing what they're up to. Again, because I'm also not part of them, so I can't also speak on their behalf. And they don't pay me a spokesperson. But the developers behind Kigali Heights, again, are developers. They're not investors. They've been trying to sell Kigali Heights since 2019. Kigali Heights was finished in 2016, but I think finally 2017. As a developer, you hold a property for 2 years, get it to a certain point where it's full, at least the occupancy hits at least 60-70%, then you try to sell it off. They've been looking for buyers for a very long time. And I think they've been failing to find the right price. Because I remember in 2019, it was considered premium, like very expensive per square meter. It was what they call class A. I think it's A1. Again, I'm not a real estate expert, but that's the class of building. That's the highest you can reach. And so the price per square meter was really, really premium. And so investors were, then COVID hit, and I'm assuming that took some time. But the developers of Kigali Heights also have other developments they're trying to get into. I don't know if you know about the Busanza housing that was set up to relocate people from the Kabuga Kanyarutarama, that area in Nyarutarama, where densely populated area, to shift people to clear up the land for the development of
Green City
of sorts. Same developer. So why would you tie up capital in one project and another project and a third project and a fourth project? And it doesn't make any economical sense. And especially when you're looking at the amount of money involved in these projects, you don't want to tie up $200 million in fixed assets. You'd rather take another $100 million and keep rolling it around in project, the next project, the next project, the next project. And so, again, I repeat, I don't think it's necessarily about the mall, because again, Rwanda has changed. There's a building in town where BPR is now. That building, for the longest, people were like, it's too big, it's too tall, it's where are the tenants going to come from? The tenants have been found. When you look at the RDB building, the Albert Supply building, opposite old RDB, people are like, it's a big building, who will fill it? It has been filled. When you look at governments, so government in of itself is one of the largest clients of commercial real estate in Kigali. When you look at that target for square meters, they are still, I think, at 60%. There's still a shortfall. So there's some business people who have just made it their business to find prime property with their capital, build real estate, and then sell it over to government. That's their business model. And so the best, what I'm just trying to say is that demand will always be there for real estate. And especially as Rwanda becomes an investment hub, you see the inflow of FDI into the country. These multinationals need offices, even if it's just an office for one person. I'm telling you, like when I set up that co-work space and serviced offices at Kigali Heights, it looked like I was a madman, because I was taking up 570 square meters at the time, and I only had one client. So in context, I was taking up a lease of $13,000 a month, and I only had a client who was willing to pay $2,500. So who was going to cover the other $11,000 a month? But I knew it was just a matter of time before the clients came, and sure enough, it was filled up. And so my point is, somebody on my side, I would say new demand is good for us as consumers, but more especially it's also good for the market in general. So what does that mean? It means that even as developers, guys are going to have to be more efficient to make sure that they can price their product properly, because more competition means the price will go down, right? They have to price their product competitively, meaning that they have to build more efficiently.
But you know the price of square meters is not going down, yeah?
They will. It's just a matter of time. Just wait and see. Obviously, it will keep up with inflation because the cost of cement has gone up, the cost of tiles have gone up, etc., etc. But then again, on the flip side, don't forget there are other things happening in the sector. So real estate from the side of construction material. Recently, Simera was acquired by Defca Group. This Narendra Naval, I think that's his name. I really love the guy. You should listen to him talk. Very, very astute businessman. So he acquired Simera, then Simera went and acquired Prime Cement. So you have one company with so much production capacity available, and cement is one of the largest, most expensive, one of the most, it takes the largest cost when it comes to import of any development, right? Knowing his business practices, he's going to work towards driving the price down, because his belief is the more people can afford cement, the more development can happen, the more money he makes. So he'd rather take a smaller margin and push volume.
Make more sales, yeah.
Exactly. So I genuinely believe that price per square meter will go down. That's my hope. Unless the real estate agents and property managers, who we all know, they decide that, no, we are going to maintain the price at this. I don't see it happening.
And fix it?
I mean, at the end of the day, it's a business owner. A business owner can decide to price their laptop at $5,000. It's up to them. It's just that will they find customers?
Is it like the real business owner sells straight to the final consumer, or it just goes, there's a middleman in there?
There's always
the middleman also will determine.
There's always a middleman.
No, there's some private, business practitioners who have failed to lift price. In as much as they are private, we took a look at the story yesterday of the medical practitioners who are complaining, and they're saying that they're held back. They cannot increase price of a service.
But that's regulation. That's another story. I mean, it's the same way like a bank cannot go and say, let's take
they fix their rate.
The rate is set by the central bank.
Rate, yes,
because it's a very strategic
no one is
sector.
going to help us with landlords. I remember the central bank one time came up and said landlords should never charge in USD. Landlords adamantly
which they should
still
not,
charge in USD,
which is very painful. I think there should be a regulation when it comes to landlords and locations, to be honest.
Okay, let's be honest. If you've ever looked at real estate as an asset class, for me personally, when I'm trying to look at how to invest my capital, I always try to assess where's the best place to put my money, and I weigh it based on risk and reward, right? Real estate in Rwanda has still not hit the sweet spot that everywhere else in the world has hit, where I can earn 10% on the dollar returns on my real estate.
What do you mean? As I see, everyone is constructing left, right, center.
I'm coming to my point. I'll give you another example. If you want to know that housing prices are too high, right? If I take a mortgage, let's say 70% of buying a house, a residential house, right? And I put up the 30%. If the rental collections from that property cannot cover my bank payments, then the price of the property is high.
That's why landlords are pushing the price up.
So I'm coming to my point. Real estate in Rwanda has still not hit that point where it makes sense as an asset class, as an investment. Land is more profitable than a residential house than building a property, and that's the reality. The return on investment is significantly higher, and so you find people are going the route of buying land and flipping it versus actually building housing. And the reason why is because inputs are still expensive. We import, of the stuff that go into finishing, I think we import, other than maybe granite, East African granite, which is also producing, and the demand for its products are significantly higher than its supply. We import majority of the finishings, the porcelain. So these are the sinks, the toilets, most of the tiles, the fittings and fixtures. Nothing is manufactured locally, and you find that in of itself makes us import inflation. So to develop a property, it's still very expensive, and so the only alternative is to increase rent. But like I said, time will tell. If like I said, these investments in cement are not a mistake. There's a strategy that RDB it was Minacom actually, developed Chera, I think in 20, I can't remember, it was with NST1. It was called Domestic Market Recapturing Strategy. And the whole essence was to identify what are the largest things that suck forex out of our country. And so cement was up there, I think sugar was up there, fuel was also up there. And so then the question was, how can we now capture these markets by creating domestic supply? And so cement has been a very big, one of those wins that we can say cement is a good thing. And coming back now to real estate, again, just give it time. Eventually, real estate will become a lucrative investment where you can invest your money, you get a bank loan, and the rentals pay the bank loan plus a little extra for you to take home.
How long do we have to get there? Because I see all plots of land are being taken over by I don't know who.
I cannot. I'm not a prophet.
Unless you're saying we wait to go to we wait to go to Nyamagabe for construction.
I mean, at the end of the day,
Changwa to Jende Momotara.
At the end of the day, everyone is going to leave the city. The city will be left for particular people. Let's just be honest.
No, but
that's
I mean, it's the reality is the borders of Rwanda are not increasing, but the population is. So whether you like it or not, we either go up or we go wide. And so we're gonna go wide until we can't, and then we'll go up. Yes. So my point is, like, I mean, so my point, I think for me, again, I'm not a prophet. Only a fool can tell you he knows what the future holds, because you can walk out today and you don't know what finds you outside this door. A lot of people predicted that they're gonna make money in 2019, saying we have picked up, the country's progressing. Then COVID hit and it equalized everything, not just in Rwanda but globally.
Now in this quarter we expected to make a lot of money. Then Mabag,
decides to surface. But I think for me that was not a big scare. However, it has kind of shaken a few things up, but it's not a big scare. It's very easy to handle.
It's exactly. But I think you need to understand that the way our modern economy is structured, everything is interlinked. So immediately you take out, there's some change in business as usual. It will affect the way money flows, and it will affect the liquidity in the market, and in turn it will affect so many other things. But I repeat, the reason why they say business entrepreneurs and business people are risk takers is because they make an investment in spite of the fact that they don't know what the future holds. And so I say, you asked me, when do I think that this will happen? For me, I would say, build your capital base, because anybody with money is going to make money. Whether it's today, it's tomorrow, whether it's during COVID or it's not, whether it's Marburg or not, when you have capital, you will make money. So the logic is just focus right now, whatever you can, on building your capital base. And then learn, educate yourself on trends. Once you understand trends, then you can say, okay, when is the right time to invest when it comes to a trend? I've learned normally that when there's bad economic times, that's the best time to have money, because you buy property cheap, and that's where you make money. If you can buy an asset for 70 cents on the dollar, so meaning if it was supposed to be 100 million, you buy it for 70 million, 60 million because someone is desperate for money, or the bank is about to foreclose because they don't have the cash, that's a good deal. And so my logic is, the only advice I'd give anybody who's listening to this, build your capital base. And just wait for those signs, because there will be signs.
When you say build capital base, what do you want to refer to? Collect and stock money in the bank?
No, you can. So you see, you can. So there are ways you can have cash without necessarily having it as cash. And I'm not going to do ad placements for people because they've not paid me to do them. But there are investment vehicles in our beloved Rwanda, very stable, understandable ones.
They're bonds.
That's what I was about to say. So there are these money market funds, there are these investment funds, very regulated by BNED, not these ones of fly-by-night guys who come and tell you, I can make you 10% per month. No, these are guys who tell you, the ones I've seen average between 11 to 12.5%, 13% per month. Some of them are even tax exempt. There's this sustainability-linked bond of BRD. All of these things, you park your money there, knowing that when now an opportunity comes, it doesn't even take 24 hours or 48 hours to get your money out, depending on the amount of money. But let's say 100 million. You keep saving your money. And by the way, most of these funds you can buy. There's one I know by a very reputable bank, but they have a subsidiary that does it. For them, you can keep sending to your account via mobile money. Anytime you have money, even as little as 100 francs. I think 100 francs is the minimum, or 10,000 francs, or 1,000. One of the two, one of the three. But you just send money from your Momo to your account, and every 6 months they give you your return on interest, your return on investment, which is it's 12.5% per annum, so it's 6.25%, and I think it's it's tax exempt. So my point is, pile up your cash and stuff like that, highly liquid investments. By the time somebody lifts their head and there are issues going on and there's maybe a lockdown, God forbid that it happens again, but you are ready to now pick up assets that are being sold cheaply.
Very interesting. Ephraim Rumwenge caught off guard here for this conversation, but God is good.
All the time.
We're going to take a break and then come back into News Hour.
Audio Jungle.